There's two areas of focus that I want to discuss today, and let's dive right in. So the first area, which everybody's been talking about, is Trump's inauguration and what policies he's going to implement and how that will affect the markets. And the second, we're going to talk a little bit about GDP outlook this year and what sectors might do well, especially as it relates to U.S. corporate earnings. So let's talk a little bit first about Trump's policies and what's likely to happen. So a lot of media was saying Trump is going to out of the gate, he's going to implement tons of tariffs. Now, tariffs are one of those quirky things when it comes to executive policy because tariffs can actually be implemented under executive order. And what that means is that the president does not require Congress approval in order to put some sort of rule or effect into place. And tariffs are one of those categories that falls under executive order. So Trump at any point can say, I'm going to issue a tariff on Chinese goods, and that tariff will become effective almost immediately, right? Probably within the same day or maybe the next day. Whereas maybe some other policies might have a slower effect. And the media was saying Trump is going to implement tons of tariffs. He didn't do that right out of the gate. He sort of focused a little bit about on TikTok and extending the ban a little bit there, which was maybe more of a publicity stunt than anything else. But the tariffs, I think, are really going to be the policy that all eyes are going to gravitate toward. Everybody's going to be watching him to see what he does. Now, if Trump does implement tariffs, which are very likely in some way, shape, or form, how will that affect the markets and how will that affect the economy? Everybody feels that tariffs will ultimately impact inflation. And you're probably right that initially consumers might feel the effect of tariffs. Again, this is sort of a 50-50-ish chance where consumers might feel the effect. But more often, it's really the companies on their margins will feel the effect, as well as some of their wholesalers. So any company that's operating outside of the United States or has a large presence out of the United States, they're going to feel it on their bottom line ultimately. There's only so much of the tariff cost that they can pass off to consumers, whereas most of it really is just going to hurt the company's bottom line. Now, on the flip side, this is going to reward companies that stay within the United States or bring business back into the US versus relying on foreign imports and exports. So again, something just to keep in mind of the tariffs, whether or not they happen, again, very likely that they will happen. I don't really think it will affect consumers so much, but it will definitely affect the profitability of a lot of companies, especially most of the companies that are listed on the S&P 500 index, right? These are the largest 500 companies in the United States. And basically every one of these companies has some sort of business outside the US on foreign territory. So again, it's likely to hurt their bottom line and thus hurt some of their earnings. So we'll see what happens. But all in all, corporate earnings are still looking very, very strong and very, very healthy. So let's transition a little bit to point two, which are corporate earnings. So a lot of companies are going to be releasing their earnings data very, very soon. Q4 of 2024 is already wrapped up. So we're expecting that data very shortly. And a lot of analysts are actually projecting that American corporate earnings are still going to remain strong. I tend to agree with them. I think corporate earnings will continue to remain strong. They've proved a ton of resiliency between the COVID-19 pandemic. They proved a ton of resiliency during the regional banking crisis in 2023. So there really is a lot of opportunities for companies to do well. I'm expecting earnings for most companies by the end of the year to be in maybe like the low double digits, which is still awesome, right? And that's going to help American GDP stay relatively competitive on an international level. Now, GDP is going to be a smaller number, right? Gross domestic product. This will probably be between the 2 to 3% range by the end of the year. So it's definitely slowing down. Again, this is what the Fed has been wanting the economy to do to try to get the inflation back under control, which they've really been struggling with, right? So part of the challenge there is what's the Fed going to do with interest rates? But really, American companies, I think, are still going to be very competitive. And I think really the tech sectors will do well, especially as more and more money gets poured into artificial intelligence technologies and the financial sector. So we talked a minute ago about the regional banking crisis, and basically every bank nationwide got hit with a special surcharge. If you live in a condo association or a townhouse association, you know that's what sometimes the HOA will hit their residents with a special assessment. And this is due because maybe the roofs need to be done on a lot of different buildings, or they need to upgrade the piping system for a lot of the buildings, whatever the case might be. But HOAs will often say, we can't afford this based off of our member fees each month alone. So we need to charge an assessment above and beyond our typical HOA fees to pay for this expense. And that's exactly what happened to banks in 2023. The Fed stepped in and said, hey, we need to assess you guys in order to save some of these regional banks and help them get consolidated. And some of them even got absorbed at that point. So banks' earnings in 2023 really did not look too hot. 2024, they did okay. But 2025, I think a lot of banks have really recovered since then, especially after dishing out a lot of the money on their surcharges. And I think financial sector will be a tremendous driver of growth this year. And I think it'll be very competitive along with the tech sector. The tech sector traditionally over the last several years has really led the charge in terms of what industry performs the best over the year. I think the financial sector might give them a run for their money. So we'll see what happens. Again, we're still waiting on a lot of the earnings reports to come out, but I think financials and tech are really the places to be, especially when you're looking at asset allocation and wondering where the best sectors and industries for me to sort of place my money. So again, this is just based off of the data that we're receiving. This is not meant to say this is a recommendation for everybody to go run and put their money in one place or another. It's just, what is the data telling us and how can we make good decisions with our investments moving forward? So with that in mind, thank you so much for tuning in today. Really look forward to chatting with everyone every week. And I hope to talk to everyone next week, and stay warm. It is absolutely freezing outside. So thank you so much again. We'll talk to you next week.